Good morning. Thanks so much for joining in. You're watching BQ Prime. My name is Alex Mathew, and you're watching Trade Talk. This is the show that gets you set for the stock-specific action that you could see at the start of trade and, in fact, through the trading day. As we start the new week, and in fact, the second day of the new series, we're talking about geopolitics, we're talking about monetary policy that is going to determine the course of risk assets through the week. Because you have a ground invasion, a limited ground invasion that was started by Israel. Troops and tanks have been sent into northern Gaza, but the scale of that invasion is not as aggressive as was previously thought, and that's had a bearing on international markets so far. Having said that, risk assets are in focus, and you have the gold prices that have breached that 2,000 per troy ounce mark on the upside. And you also have oil that is hovering around that $88 per barrel mark. Now, you have US Treasury yields, which have remained volatile through all of last week, and that have actually proved to be a bit of a turmoil-causing factor for risk assets as well. And you have, in the Indian markets, you have equity markets in India that pulled back quite sharply on Friday, but still registered their worst week in 2023. Whether that pullback continues or not is a question mark that we will try and address at the start today. But of course, there's going to be key earnings to watch in the way of, or rather the reaction to earnings in the way of the reaction to Reliance Industries. We'll talk about all of that in just a bit. But let's focus first on the major cues that you will likely see pan out over the course of the day from the F&O space. And Agam is joining in to give you some perspective on that. Agam, good morning.
Good morning.
And quite the pullback you saw on Friday.
Yeah.
The question is, does that continue through the week? We managed to close above 19,000 on Friday.
Right. So, Alex, based on the data, of course, it was a truncated week. Last week, in terms of sessions, we just had 4 trading sessions. We did have 3 of them in the red and a little bit of a covering coming through last Friday, so some strength returning there. However, there are still substantial amount of shorts into the system. Yes, we did see about a short covering on Friday, on account of which we saw the open interest in the Nifty futures decline by around nearly 2%. We really didn't see too much of change as far as the Bank Nifty open interest is concerned, but for now, activity in the Nifty returns back over 19,000. In fact, we're working roughly around a 200-300 point range for the weekly option series, considering the maximum open interest is currently at the 19,200 call and the 19,000 put. So that's a rough range that we are working with. Of course, this is most certainly likely to change should we see sharp moves returning to the Nifty. And as far as the Bank Nifty is concerned, once again, levels have risen, and we are starting to see 43,000 mark activate again with the call out there with max OI and the put at around 42,500. That should be some sort of a support, at least in the near term. And going in, while we have seen some amount of shorts being covered, a lot will depend on the triggers that come through the course of the week, and that will perhaps determine whether or not some of your relatively longer positional bets will start seeing covering. But it's a wait and watch for now, Alex.
For the global markets, Agam, one of the major cues is going to be the outcome of the Fed meeting that is midweek.
Yes.
So let's talk about that. And in fact, a few of the other global cues that we're seeing with our next guest. We've got Arvind Sanger joining in. He is the managing partner at Geosphere Capital. Arvind, thanks so much for joining us this morning, and good morning to you. What do you make of all of the cues that you're seeing at the start of the new week? I mentioned geopolitics that continues to be a factor, but there's also the Fed policy and the fact that Treasury yields in the US have been elevated. The 10-year still stands at very close to 4.9%.
Yeah, so you identified 3 very important strands that we have to watch. One is obviously on the geopolitical front. On the geopolitical front, you have the Ukraine war that's been going on for a while, and now you have the Israel-Hamas, and the concern is that this could spill over into a broader risk in terms of more Middle East countries getting involved, whether it be Lebanon or Iran or anything else. And then you have the Fed meeting this week, which the expectation is generally very strongly consensus that there will be no change in rates. But there's a concern that even if there's no change in rates, how hawkish or dovish will the press conference be after that? And then you have this interest rates on the long-term interest rates, a 10-year yield, which is threatening to go again to 5%, which it had briefly touched a few days ago. And there's a concern that this may not all be the Fed's doing, but it may also be caused by a budget deficit in the US, which is at 7% plus, which is the highest it's been outside of a war or a crisis like COVID. So, there's a funding need which it seems will require high interest rates. So all of these headwinds, in my opinion, none of these are going to clear up unless the Fed comes out with some very dovish statements. And therefore, I think markets are going to remain somewhat range bound. And the earnings season so far has been okay in the US and in global markets, but not anything that would cause investors to get up and want to buy stocks in a hurry.
The other factor, and I'm looking at China and the updates from there this morning, or rather over the weekend, there is the Evergrande issue. I believe there is a case that is being heard in the Hong Kong High Court today that will determine the course of Evergrande, whether it goes into liquidation or not. Is that a big red flag issue for you? And the fact, I was reading a report, Arvind, earlier this morning that spoke about the higher borrowing numbers from China onshore. Bond issuances have gone up, I believe, 63% higher than the average this year. How big an implication is that for the markets? It's an indicator, of course, that China is stepping up its investments and its bond issuance.
No, I think the China problem is one that has been going on for a while. The China real estate market and the major developers' financial challenges is something that I don't think is incremental new news. So the Evergrande situation has been with us for several quarters now. So I don't believe that that's new news. I think the real new news, if you ask me, is when President Xi made a trip to visit the PBOC last week. And it seems like there is a little more, I wouldn't call it quite panic, but I think there is a real serious understanding that they have dug themselves into a big hole between the real estate slowdown that they're seeing and business confidence and other things that have taken a hit after the government went after tech companies and others. So youth unemployment is high. Several sectors are struggling because of government actions against them. Real estate obviously has got a much more fundamental problem. I think the government is starting to maybe get ready to put substantial financial support in terms of capital raising at the central level to give money to local governments to be able to spend, and other measures that might cause China to actually, the worst might slowly ebb. I don't think there's any V-shaped recovery, but I think China is less of a concern to us now. It has been a concern all year, and it may not be getting any worse and may get slightly better. So China is not one that we're really concerned about.
From that perspective then, and I think this is really the crux of the conversation and the kind of insight that we try to glean from all of our guests that tune in from outside of India, which is how are you looking at India in this context? Because if you say that the worst might just be over from the China perspective, then that becomes much more attractive as an investment destination. And so far you've been talking about India as the bright spot. Does that change heading into the end of the year?
I think any rally in China will be more kind of what I wouldn't call it quite a dead cat bounce, but I would call it more of a trading rally. I think the difference between a trading rally and a fundamental view is that India is more of a fundamental long term, and China could get more of a trading rally because so much bad news is priced in. That doesn't mean that you won't get some inflows and outflows for a very short duration, and that can happen. But in my opinion, China may benefit a little bit, but in terms of India's own fundamentals, I think the only problem with India, in my opinion, is that the stocks have gotten a little frothy. You had some, small and mid-cap IPOs which saw exceedingly strong demand. So I think what you're seeing is maybe a little bit of healthy profit taking, It doesn't take away from the long-term story, but I think the market maybe had gone a little too far, too fast, and therefore I don't think it's so much China, but India's own valuations which have gotten in the way. China's, if there's a dead cat bounce, China, or there's a modest recovery from oversold, that may cause a little bit of an outflow from India and other emerging markets, but I don't think that's India's concern.
All right. Thank you so much, Arvind, for joining in and giving us that perspective early in the morning. All right, let's focus in on one of the key aspects of trade today, and that's going to be how Reliance Industries opens up. And that's on the back of results that were posted at the end of last week, of course, post-market hours. I'll take you through the headline numbers. The operating profit, in fact, increased by about 7.5% sequentially. And you had the margins that stood at 17.66%. That compares with 18.35% sequentially. A broadly in-line set of numbers. But instead of me going through the key numbers that you need to watch out for, let me get my guest on. We've got Deven Choksey, Director of DRChoksey FinServ, joining in. Deven, thank you so much for joining in. You're looking particularly festive this morning, I must say. What did you make of the Reliance Industries results? Were they in line with your expectations? And what is the key talking point?
Yes, Alex. Good morning. And certainly, I think the results are definitely, I think, much above the expectations, frankly. Though we were expecting very similar kind of a tone as far as I think the result outlook is concerned, the numbers are probably, I think, more little ahead of our expectation as well. Well, I think on one side, we had the questions about the company's core business not performing well. That business in itself, I think, has not disappointed. I think that business has remained absolutely convincing and strong, which is your oil to chemical business and exploration businesses. I think both these businesses have remained extremely strong on a very steady wicket, as we would like to call it as. On the other side, the consumer businesses, the retail and the geo platform, both of them have shown distinctly a steady to good set of numbers, which is again, I think, proving that the growth in the business is likely to continue. In fact, I think the geo rating is now probably moving much higher beyond 120,000 crore revenue book, I think, from this year onwards, it looks like. And could be, I think, much above 60,000 crore worth of EBITDA from that particular platform itself. So, frankly, I think on a yearly basis, the run rate is quite strong as far as geo is concerned. And similar is the situation with the retail platform, which is probably, I think, one of the most pleasing sound to the ears from the point of view of looking at how the growth story is being communicated out here. The company is growing the revenue book at the same time, I think, when the EBITDAs are also going up. So, which is again suggesting that last year, whatever the rate of growth, I think, which we have seen, vis-a-vis that this year we are seeing extremely strong rate of growth in the business of retail as well. So all the consumer-facing platform as well as the industrial platform, O2C platforms, I think are showing relatively a steady pace of growth, and that is where we believe that the company is very well placed currently.
I have one follow-up on O2C, and then I'll move to the retail, which I think is a very exciting question. But on O2C, we're expecting to see some scrimping of margins going forward. Refining margins is what I'm talking about. Is that likely to have a bearing on the rest of the year, or are you sanguine on this business?
I think the refining margin in particular, my understanding is that we have already set into the winter as far as the Western world is concerned. So obviously the demand for the oil products is going to remain on a higher side. Given that situation, I think the margins are also going to be on a higher side. And Reliance's refinery is basically exporting around 60% of the products outside the country. So to a greater extent, I think at least in this quarter, the third quarter as we are already into, they've got a regular supply of crude oil coming in even from Iran, which is probably at a discounted rate. So on one side, crude oil is at a discount. On the other side, the GRMs are on a stronger wicket because of the winter season. I would think that the margins are unlikely to get affected in due course of time as far as I think the business of the company is concerned. And generally seen that they are at least one quarter ahead in knowing the trend about the booking of the crude oil, etc. So obviously in the fourth quarter also, I believe that I think margins, if not better, I think would remain steady. And that is where I believe that the O2C business continues to remain, I think, at the steady pitch, as I would like to call it as.
Fair point. On the retail side, you mentioned the business and the numbers look very pretty, as you pointed out as well. But I think a lot of investors' ears are perking up on any mention of value unlocking, Deven. How important is that from your perspective as an investor into Reliance Industries?
Yes, I think that's a billion-dollar question for every one of us. That when is the value unlocking taking place? On one side, they are continuously inviting new and new investors, and in turn, I think capitalizing the books of the company with newer investments, helping also everything in the books. At the same time, using the same funds for acquiring newer brands, creating better margin prospects for the company in turn. That process is continuing for Reliance Retail, and that's a good sign. On the other side, all investors are looking for the listing of these companies, both retail as well as GA platform, and that is what something the clarity is not coming forward. In my viewpoint, I think this possibility is not ruled out, but at the same time, timing of this possibility could depend on few factors. One of the factor could be the time at which the business, I think, starts getting ready. Once the renewable business starts contributing to the turnover and the profits of mainframe Reliance, then possibly I think you are at the same time, I think Geo platform and Reliance Retail getting separately listed could add a sweet sugar on the top. So as a result of which, I think you are likely to see better prospects going forward. As of now, I believe that I think every businesses are interlinked to a greater extent. This is the second point. I think to a greater extent they're interlinked. Like Geo platform is significantly, I think, driving the online presence of the retail business. And that is where probably I think you'll have to see both these businesses are segregated separately. At the same time, I think they remain sustainable going forward once they are segregated and listed separately. So from that perspective, I believe that I think we are still probably I think couple of quarters away, as I see it, from the point of view of getting it listed. But definitely, it looks clear that 24-25 would be the financial year in which retail as well as the geo platform business likely to get listed. Because in that particular financial year, I'm expecting by the end of the financial year, the starting of renewable business also into the books of Reliance Industries.
Fair point. Okay, FY25 is the one to watch. One final question on Geo, and then I'll ask about valuations as you see it. On Geo, I saw the ARPUs at 156. There's a slight improvement. How much do you anticipate they will be able to push the envelope? Because there is considerable pressure in terms of maintaining or even expanding the market share in that space, and pricing is a key issue. Where do you see the sweet spot for them in terms of ARPU?
I think that's a fair question. I think currently the larger part of the ARPU contribution is coming in from the mobility customers. Now they have been launching the enterprise and the home fiber, geo fiber. So as a result of which, I think these are the new segment of customers who are basically getting added into the portfolio. So comparatively, the mobile customers are contributing relatively less amount of growth, somewhere around 7 to 8% kind of a growth on the data consumption side has been experienced as far as I think the mobility customers are concerned. But in my viewpoint, once the enterprise segment of customers and the home segment of customers are getting added, which they made an announcement in the last quarter, which I believe is likely to accelerate in the subsequent quarters of the current financial year. So again, I think the 24-25 would be the sweet spot again as far as this possibility is concerned, wherein you are likely to see in some quarters the larger part of rollout of the enterprise as well as home segment of businesses, which is where probably we are likely to see the higher amount of contribution to the revenue as well as to the realization on a data basis per GB of data basis. So that is where I believe that I think the major crux lies. We'll have to probably allow this rollout to take place because that is where probably the complete integration of the business is taking place. On one side, the mobile customer is basically drawing the data from either the home segment or the enterprise segment. And at the same time, the data pool is also getting increased into this particular area. So that is where probably the differentiator is coming in. We'll have to wait and see how it succeeds. But their rollout program is on the way. That is a good sign.
Okay, fair point. Now, final question, Deven. In terms of where you see the valuations currently, are they attractive? Because they've come off quite significantly from the high point of the year, and in fact, for the year so far, that Reliance price is down. So, would you say that it's looking attractive right now to purchase, based on what we know of the Q2 results?
Yes, absolutely. I think when you look at, I think the sum of the parts calculation of each of the verticals which they are operating in, I think the sum says that I think they should be putting somewhere around 3,000 plus levels. Vis-a-vis that, I think currently the stock price is quoting around 12, 20 to 50 levels. So in my viewpoint, I think there is a headroom available in the stock price of around 35 to 40% from current levels. And that is where probably I think one would like to put maximum amount of attention to at the same time. That if on one side, while inviting new investors into, say, for example, retail, if their valuation is basically suggesting that they are going to be at a price at which I think the stock is currently ruling is going to be one third of the price is coming from Reliance Retail alone. So in my viewpoint, I think the opportunity is remaining significant at this point of time. Maybe I think 35-40% kind of an appreciation that we are expecting in the next financial year is distinctly possible. At the same time, I think the stock market is underperforming at this point of time, largely because of the fact that I think the larger play in the stock market is coming from the ETF sides, and I think that is where probably I think the higher amount of I would say shorting is also taking place in the market. Probably, I think that one factor is keeping Indian markets from going up from above from current level, and that is where I think we'll have to keep an eye on as to how the ETF selling cools down in coming months, which will probably allow some of the large cap companies to start appreciating to their potential in the coming months and quarters.
Very key insight there. Thank you so much, Deven, for joining us and giving us that perspective this morning. All right, see, there you have it, the view on Reliance Industries, and a holistic view at that. We've talked about all of the key businesses and also the SOTP, or some of the parts valuation, according to DRChoksey, and he says that it's a screaming buy at these levels based on where he sees that some of the parts valuation. But let's focus on the other big story that developed, and this is quite late on Sunday that this news update came in. It's from the financial space, and it has to do with AU Small Finance Bank. It has announced that its board has approved a merger with IPO-bound Fincare Small Finance Bank. We've got Vishy joining in, Vishwanath Nair joining in, to give you some perspective on the context and also what the path forward looks like, what the key aspects are that will prove integration or will prove beneficial for EU Small Finance Bank. Vishy, apologies for that long-winded introduction. What can you tell us about this potential merger?
Don't worry, Alex, I've had a long night anyway. But this announcement that came in at about 10:30 p.m. On the exchanges essentially says that Fincare Small Finance Bank will merge into AU Small Finance Bank. That means basically it's more or less an acquisition. It's an all-share sort of deal. For every 2,000 shares held in Fincare Small Finance Bank, the shareholders will receive about 579 shares of AU Small Finance Bank. Now that's the basics of this transfer. But through this merger, essentially, as AU Small Finance Bank gets a pan-India presence, it also gets a slightly larger advances portfolio and deposits portfolio, which of course helps in diversification because Fincare is a microfinance company. It started as a microfinance company, about 93% of the business still is in microfinance. What will be interesting to watch is the management's commentary. That there's a press event later in the day where they will discuss the merger with the media. So we will watch out for any kind of commentary on future synergies. Now, of course, technology is a big point of view, but technology is pretty much the same across most banks in the system. So we will watch out for some of this commentary, try and figure out how exactly the synergy will work out, whether AU Small Finance Bank has the gumption to complete this merger. Of course, the merger itself is subject to RBI rule, CCI rule, as well as approval from the shareholders.
All right, Vishy, thank you so much for bringing us those updates this morning. Certainly a stock to track at the start of trade. Now, very quickly, let's take you through some of the other stocks that you'd want to watch out for, and earnings updates are expected through the day. UPL is one stock that will be in focus. And very quickly, I'll tell you, the top line is expected to be down about 13.4% year on year. And there's also expected to be a cut of about 50% in the PAT number year on year. This is largely on expected lines because pricing pressure is expected to continue for the company or have continued for the company in the second quarter. And that's on account of China's dumping margins and profit both under pressure. And that's because the demand scenario is not looking so good for the company. Revenues is set to decline both in North America as well as in India on account of weak channel demand as well as inventory destocking. So certainly one stock that will be in focus. The earnings are expected to come in during market hours, so that's something you should track. What are the other earnings that we know about right now that could have a bearing on the stock prices today? Varsha is joining in to give you some perspective on that. Varsha, good morning. I've asked you to curtail your list once again today. We're talking about the stocks that we think are likely to get impacted in trade. What do you have for us?
Good morning, Alex.
Morning.
So let's start with M&M Financial Services, where second quarter profit declined, missing analyst estimates. Now the company's standalone net profit fell 47% year on year to rupees 235 crore. Now, the bottom line was weighed down by 14% spike in total provisions set aside for stage 1, 2 and stage 3 assets during the quarter. As on September 30th, total provisions stood at 3,775 crore. Now, M&M's asset under management grew 27% year on year. The management is confident of having the asset growth in the ballpark of 20% upwards level. The net interest margin compressed 30 basis point quarter on quarter to 6.5%. Now, this was due to changes in portfolio mix and increase interest costs. Next, we have Bharat Petroleum, where company saw its net profit fall 22% quarter on quarter in the quarter, though it surpassed analyst estimates. Also, the revenue of the exploration and production of hydrocarbon segment rose 2.97 times, and the market sales for the company for H1 FY24 grew 7.5%. Now, the increase in market sale was mainly led by aviation turbine fuel, retail of motor spirit, and retail of high spirit diesel. The average gross refining margin for the company for H1 FY24 stood at $15.42 per barrel, as compared to $22.3. Now, next we have Zen Technologies, where the revenue almost doubled and EBITDA was up 91% at 19 crore. Margins stood at 28.5%. Now, a company expects to achieve a revenue target of 450 crores in FY24, and out of the total order book of 1,487 crore, equipment orders worth rupees 1,200 crore are slated for execution by 31st March 2025. Also, commentary indicates FY25 revenues of at least 750 crore. Lastly, we have Jupiter Wagons, where revenue was up almost 2.2x at 880 crore and EBITDA was again up 2.42x at 121 crore. And if you see, the capacity of existing foundry at Kolkata unit will be increased from 2,500 metrics to 3,000 by conclusion of this fiscal year. Also, Indian Railway tender for 20,000 wagons has been issued, and the timeline for submission is in mid of November. And the wagon manufacturing capacity has been increased to 700 wagons per month at present. Once the expanded capacity foundry is made available, it is expected that the production capacity will increase to 800 wagons per month.
Okay, fantastic. All right. Thanks so much, Varsha, for bringing us those updates. You'll see in just a few minutes what the stock impact is going to be. But for now, let's shift gears and talk about the stocks that are in the news. And this is not earnings related, of course, but this still could have a bearing on the stock prices. Rishi has just exchanged places with Varsha to give you some perspective on that. Morning, Rishi, what are you picking up?
So firstly, there's Maruti Suzuki, and it had its con call, so a few key takeaways. So it's expecting a growth of about 10% compared to an industry growth rate of 5%. Then precious metal prices have declined, and it's expecting this impact to come in the third quarter. But again, it could be offset by rising steel prices as well. Then it is also benefiting from a favorable foreign exchange as the yen is depreciating against the dollar. In fact, it traded at about a 33-year low. So that is also something to watch out for. Then we have Ultratech, whose board has approved a 13,000 crore investment for a 22 million ton capex expansion, and this is going to be its phase 3 expansion, and it will undertake this from FY26 onwards. It is currently undertaking the phase 2 expansion to increase its capacity to 160 million tons, and from there it will increase to 180 million tons with this investment. Then we have Dr. Reddy's Laboratories, where its formulation unit in Hyderabad has gotten 10 FDA observations. It already had been issued a Form 483 with 9 observations. So the stock may react negatively post this news. Then the Tata Group, where it will be the first Indian-based company to assemble iPhones in India after Taiwanese-based contract manufacturer Wistron has agreed to sell its Bangalore-based iPhone assembly factory for $125 million. Then we have Panacea Biotech, whose subsidiary is going to launch a generic version of Abraxane. So this is a medication for different types of cancer, including breast cancer. Then we have IRB Infra, who has been declared as the preferred bidder for 316-kilometer highway in Uttar Pradesh and Madhya Pradesh. With this project, it is expected to add about 3,900 crore to its order book. So these are the stocks you need to watch out for.
Thanks so much, Rishi, for bringing us those updates. Reliance Industries, as I said at the start, is going to be the one to watch, though, apart from everything that we've mentioned, and you'll find all of the live action right here on BQ Prime. So don't go anywhere.